Discuss the outlook for retail stocks even further with Mark Cohen, former Sears Canada CEO and now Director of Retail Studies at Columbia University here at Post 9. Thanks for joining us.
Nice to be here.
How do you see it with the trade war situation? I mean, I'm looking here at notes that say you believe that it's unfolding before our very eyes throughout the retail industry starting this fall, that economic catastrophe is. What signs do you see that that's happening?
We're staring at the abyss, and we don't know whether we're looking at a 3-foot drop or a 300-foot drop, because we don't know what Trump is going to do in September when he makes good on his threat. Clearly, the Chinese have demonstrated they have no intention to blink. And the whole notion of a tariff-led trade war is foolishness from the get-go. You know, trade wars have never succeeded. I think Trump has always felt that the country that a tariff is imposed against is paying for the tariff. That, of course, is categorically false. He keeps talking about it as if, you know, the Chinese are paying for this, which they are not. At the end of the day, most of the pain has not been evident because most of the consumer goods haven't yet been hit. But on September 1st, that may change. And then, of course, whereas 10% may be finessable for some retailers, 25% is an entirely different kettle of fish.
Did you predict that we were heading for the abyss before the first round of tariffs as well?
Absolutely, because any conversation...
So could you be wrong again this time?
I could, of course, be wrong. I'm not an oracle. But at the end of the day, I do know from my own experience, as anyone who's been in the business, who's been around for a while knows, trade wars have no winners. Everyone is a loser. The loser is the consumer. The consumer is always the one upon whose shoulders these things fall. Right now, the farmers are looking at billions of dollars of agricultural products that's rotting, that's not going to be shipped on September 1st to China. They've got millions of acreage of fields to plant, representing products which likely are not going to China.
Is the bigger risk here the tariffs or the fact that you have potentially brand blowback? Examples being just this weekend, Coach, Givenchy, you had Versace as well, that are seeing some of their brand ambassadors in China jump ship because of T-shirts that may be labeled Taiwan and Hong Kong not as parts of China. Is that type of I don't want to say anti-American sentiment, but the fact that there are these rising tensions among consumers there, is that the bigger risk here?
I think that catches a headline, but it doesn't really have any meaning. I think at the end of the day, Chinese consumers very much value American brands. Depending on how crisis-like this trade war becomes, that may change. But I don't think that's the risk to the U.S. economy, the ability of a Coach to sell, or Tapestry to sell Coach bags in China.
I meant the companies themselves.
Yeah, I think there's disruption in the air everywhere you look. But I think the disruption which represents consumption by the Chinese consumer is not the issue at hand.
All right.
It's the pain that American consumers are going to feel big time. And their reaction to it, which is always, almost always, higher prices, lower demand. Lower demand, more stores close.
We have to leave it there because we're coming up towards the end of the show here. But Mark Cohen, we appreciate it. Look forward to having you back to talk more about it.
You bet.